Hello friends, in today's video let's talk about the private limited company. So we'll discuss about why do we go for the private limited company and what are the advantages and disadvantages of opening this kind of organization. So what is a private limited company? So private limited company is a business entity which is owned by a stakeholder. If there are minimum two or or less than 200 members, then you can open this kind of private limited company. It's a separate legal entity wherein the shareholders have the limited liability. It requires at least two directors and shareholders to open a private limited company. So what are the advantages are of opening a private limited company over LLP or sole proprietorship? So in this kind of company, the shareholders' personal assets are protected. So if there is a misconduct or negligence, and because of that reason there is a loss to the customer, and if they are asking for compensation, the shareholders' assets are protected. They won't be sold to recover the loss. Since this is a big firm and recognized into Indian business, it's easier to raise capital through the equity. So you will have the ability to issue shares to investors, and by that way you can raise fund. In terms of perpetual succession, if the directors or the owners decide to leave the organization, you still have the option to continue the company. You can get more directors, shareholders, investors into the company and keep your company running in. Because of the good professional image and credibility, there is a more trust from investor and customers into this kind of company, and it's easy to raise fund. Let's talk about what are the disadvantages of having a private limited company. So obviously it's a complex and expensive to set up and maintain. It requires a higher setup cost and ongoing expenses to keep this kind of company running in. Higher regulatory compliance and disclosure requirements are also there, and strict adherence to the regulation and regular filing is required into this. So obviously you will need many returns, the audit reports, the financial earning report, that kind of report to be submitted to the income tax department. And this is also having a share transfer restriction by the company by laws. So if you just have one single person to open the company, or you have two or three people to open the company, my suggestion would be you shouldn't be going with the private limited company. You should start with, if you are alone, you should start with the sole proprietorship, or if you are having a partner from a different background or from a different family, then you should go for the LLP. The private limited company is for the big setup, I would say. That's all into the today's video, and we'll meet with a new content in the next video. Thanks for your time.